So for those of you who follow me on YouTube and pay attention to this channel when I give updates, I speak about some exterior markets outside of the industrials, the S&P and the NASDAQ. One of those markets is the industrials cousin, or its smaller brother, the transports. Let me just bring it up for you because the price action which is going on in the transports is very, very interesting. I've been calling this and speaking about this market in great detail. I've been really calling for the test of the 8,000 level and then what will happen on the next bounce. A lot of people have been paying attention to this market and they're very, very bearish on it. I've seen the rollover set up and we've seen how it's taken place. It's come down, and the low of today's candle, actually, if you pay attention to the top left-hand corner of my screen up here, let me just hover my mouse over it, was actually 8,012 points. So we came within 12 points of our 8,000 target. And what we have right here is some form of a bullish engulfing type of candlestick pattern. Very interesting because once again, we were expecting this sell-off to happen once we broke support and we set up the back test of this very important pivot point. We've sold off, but we've sold off down to a very key point of macro support. It's been a support area which has held up the market back in July and August 2014. We also bounced off it back in June 2014. We broke below it for a period of about 4 trading sessions throughout mid-October, but we've seen the bounce take place. This is 1, 2, and 3 occasions. What I was speaking about over the past couple of months at least was when we get down to this level that we are going to see a bounce. When people are looking at least the transports bearishly, we need to take the counter side of that argument or that point of view and expect that bounce to occur. Well, surprise, surprise, here's today's daily candle. Let me zoom in on the price action. And as I just alluded to, it is some form of a nice engulfing type of candle. It's actually what we call a one white soldier. We gapped up into the previous day's candle. We tried to push back down. We couldn't hold it. We retested and made that low very close to 8,000. We closed up above the prior week's worth of price action. This is the first candlestick warning us that we are going to see a bounce in the transports. It doesn't come as any surprise or any shock to me whatsoever. What is most important for this particular market right now at the current juncture is how high and how far and how fast do we bounce? The first target on the transport itself, and it doesn't mean that it has to play out over the next couple of days, is that 8,560, give or take a couple of points, is going to be the first very nice area in regards to target. I am expecting the transports to rally back up into this level after hitting the support, but this is the kicker and something which I've been speaking about ever since we broke support. What happens to this market when we see the bounce, when we see it trade back up to these levels? Are we going to establish a high at 8,560, give or take a couple of points, or are we going to once again rally back up even a little bit higher? 8,925 is a great target. If that doesn't hold, will we reclaim once again the 9,000 area? The big picture of this market is as follows. At the moment, it appears as though we have some form potentially of a left shoulder. We have some form of a topping type of pattern on the transports. We've sold back off down to the neckline. So the neckline comes in right again at this 8,000 level. If this is going to play out, we're either going to see a bounce once again back up to this level and we will see a rollover. If we see a rollover at this level, we need to be very, very cautious in our approach to the other 3 equity markets, the Dow Jones Industrials, the S&P, and the NASDAQ. I'm unsure and I'm unclear as to what will happen at this level at 8,500, or if we can even push back up to 9,000. This complete hypothesis on this market goes out the window if we establish once again all-time highs. But I am paying attention to roughly this box which I've just drawn on my screen. Just to recap this particular market, I'm not sure if anyone is actually in or is still in transport shorts. Personally, I didn't take the trade. I use this as a gauge on the actual market itself or the other 3 equity markets. But you have to understand that we are at macro support and we are going to see a bounce in this market. What is most important, just to surmise, is what happens in this location up here. It's going to be the key, so to speak, which will unlock much of the sentiment and the psychology which is taking place with a lot of this other type of intermediate type of chart topping patterns which is setting up on the equity markets. Obviously today we saw a lot of volatility, intraday volatility across all 3 of the markets. We couldn't hold below this key level here at 17,543. We have left ourselves with some form of hammer candlesticks across all 3 of the equity markets, and it's setting up perfectly, absolutely perfectly with the Dow Jones Transportation Average. I'll keep you updated on this particular market as we progress, but right now, if you are looking to get into any types of trades on the transports, they must be long orientated at this particular moment in time, and understand it would be very sensible to place your stop below that 8,000 trigger, or that 8,000 level, which once again we have established on today's type of candlestick. Now, outside of the transportation discussion, I also pay very close attention to some of the commodities markets. I like to keep my finger on the pulse of gold and silver. Obviously today what I'll change to silver, is that we have broken, and I've been waiting for this for a very, very long time, if in fact it was actually going to occur. As it stands at the close on Tuesday, we have broken macro support. We have closed, not only have we traded below it, but we have closed below this level on huge volume as well. We closed today at 1443 on the ETF itself. It's a base which we've been really establishing since November 2014. So you have to understand, a lot of people, a lot of traders at least, who are looking to buy these little lower lows, or this respective lows on the ETF, are now underwater. And you need to understand that if we do see another bounce in the commodities markets, or at least silver back up to maybe $15 on the ETF, you need to understand that we are going to see selling pressure, because we have made and we have established that break of macro support. So what I'll do, and this is what I do on the Dow Jones Transportation Average, I like to put on these red boxes, and this is what we call a back test of a macro pivot point. Right now, if I change out to the weekly, you can see we've closed below this level, much like we did when we based, or we closed below the base, which set up throughout 2013 and 2014. I'll zoom back into the daily and just show you. I might have to zoom out a little bit, but you can see what happens when we start to break below these macro areas of support. We try and hold. We may even see another bounce off from the support level. But once we get that definitive close below, you can see what happens. We get the net sellers flow back into the market, and it sells the price of silver in this instance down to its next macro support area. If I zoom out to the monthly, maybe this is going to give you a good indication. It's something which I've been paying attention to, and speaking about maybe once a month or so, when the opportunity sets up, if we really struggle to hold this 1481 level, if we zoom out to the monthly, which I'm on now, the next area of support, I mean legitimate support on silver, is coming in here at about $11.80. I'll zoom out to the weekly and see if we can really get a better or a molecular type of support area, but it really sets up around this $11.80 level on the ETF itself. I can draw in another support level very, very easily for you, and this will flow in at about $10 an ounce, or on the ETF. Now, I've been saying for a very long time, I still believe that the commodities markets do need to put in lower lows. I've been very open and transparent about that, and a lot of people have, again, opposed or given me their counter types of arguments, and that's fine. It's all very constructive. I absolutely love getting your feedback. But if I change on over to gold, even looking at the price of gold right now, we haven't closed below macro support, so to speak. It's not as if silver, where we've actually broken below all areas of support, but we're right on that critical support level on gold. So it is looking somewhat more neutral on gold, but if we can start to see definitive breaks below 110 on the ETF, we are going to see once again another wave of selling pressure flow back into the gold ETF and for the spot price of gold. My long-term target for gold, and again, I've been very open about this, is really around that 1,000 level, or even that 100 level on the ETF. If we start selling and basing around this $97 or $100 area on the ETF, that's when I'll start opening some longer term positions in gold and commodities. But you need to understand, this is very, very important. If I change on out to the US dollar, as long as the US dollar continues in its upward move, in other words, its current appreciation in the currency itself, we've obviously broken out in mid to late 2014, and since then we've been establishing some form of a primary bullish trend. As long as this level holds here about 93.5 on the US dollar index, and this US dollar appreciation continues, we are going to see once again bearish activity in the commodities markets itself. So my trigger, or what I'll be looking for to see the actual price of commodities reverse their current downward trend, is to see the US dollar actually top out and then roll over. Understanding this, if I zoom out on a monthly chart, this is where it gets even more interesting. My actual target on the US dollar moving forward comes in all the way up here at about 115 on the index. So if you put that into, I guess, percentage terms right now, here we are trading very close to 100. We're here at 96 or 97, give or take a couple of points. But I mean, just some very quick maths. I mean, we're looking at still over a 15% appreciation in the US dollar if it wants to continue its primary trend. What does that mean for gold and silver? If we're expecting potentially the US dollar to rally and continue to appreciate in value upwards of 15%, well, then you can suggest that the commodities markets are still, or there is still room for those markets to actually depreciate in value. That's why, once again, I let the charts dictate to me which direction these ETFs want to move. Obviously, there was some huge volume flowing into silver. I mean, look at this volume spike. I mean, it's absolutely incredible. I mean, it's at least 3 times the average daily volume. Interestingly enough, when you see these volume spikes at all-time market highs or at all-time market lows, depending on the market or the stock or the ETF itself, generally, they can also usher in or prescribe some form of a reversal. Now, obviously, today we don't have enough information to suggest that this is the bottom in silver. I mean, yes, we have a volume spike, and we can look back at this retrospectively or in hindsight and say, well, this was the bottom on silver. Yes, that may be the case. Whether that's short-term or long-term, time will tell. But just because we have a volume spike doesn't mean that I'm sitting here saying that, look, I'm now bullish on silver. I'm paying attention more so to the support and resistance areas and the macro areas, which have been building on these charts since late 2014. I'll keep you updated. Obviously, the candlestick today is what we call a hammer type of candle. It's also the candlestick which set up on the S&P, the Dow Jones, and the NASDAQ. Let me just change back to gold and just show you this candlestick as well. It's a perfect hammer right on 2 areas of support. So I can make the argument, yes, we are at support and we haven't closed below those macro lows. But I mean, as long as this US dollar remains strong and healthy, well, then I'm still looking at these commodity markets with some form of a short to intermediate bearish outlook. That will change when the US dollar rolls over, if it ever does, which I'm sure it will at some stage. Maybe not 2015, maybe 2016, but these are some of the intermarketing relationships, at least, which I'm paying attention to. Obviously, right now, you know, it's an absolute media frenzy going on with the markets. Obviously, today we saw, I think it was a 570-point intraday movement on the Dow Jones Industrial Average. I think it was down over 200 points, 220, 250 points intraday, but we actually closed up 100 points on or at the end of Tuesday's session. So once again, volatility is king. It's not only king on the equity markets, it's also king with oil as well. A lot of selling moving into oil, and of course gold and silver, which I've just referenced, not to mention the Dow Jones Transportation Average, which I just walked you through. I am somewhat bullish now on the transports. It's run its cycle. The cycle's over. It may stay down here for maybe a couple of days, maybe even a couple of weeks, but I'm not really expecting the transports to break 7.9 over the upcoming 1 or 2 months. I may be wrong on this market if in fact the equities go through a severe correction, which, as at the close on Tuesday, remains a little bit purely speculative given today's candle. So this is just, once again, some of the intermarket relationships which I'm keeping a very close eye on. It doesn't mean that I'm jumping into any trades whatsoever, or I'm changing my perspective on the market, or anything's changed whatsoever. The structure is still there. It's just taking a lot of time to actually work its way through the price action. Obviously, there's a lot of debate right now. Are we ushering in some form of a transition? Are we ushering in some form of a top on these markets? Or is this just a natural type of sideways correction in time rather than price, seeing it retrace back into that primary trend line? I'll keep you updated with advancements of the market, but I just wanted to say one thing and make it very, very clear. I am completely neutral on these markets, as I have been for the majority of this sideways move. I'm not in the bull or bear camp, so to speak. I'm going to let the market dictate to me which direction it wants to move. And when I see the opportunity either to get into some really nice longs, if in fact we can break above these all-time highs established in the Dow Jones in March and in late May, then that's fine. I'll continue in the bullish trend. But this price action here has got me a little bit concerned. It truly does. Obviously, today's candle doesn't really suggest that we are going to see, once again, a complete fallout down to 17,210. I may be wrong, but right now, as I have been, I'm 100% neutral, and I'm not willing to jump into trades just for the reason of getting into positions. I'm being really, really disciplined and structured in my approach to individual trades. And if that means just sitting on the sidelines and letting these markets develop and continue until we get some really clear signals, well, then that's the I guess the road I'll take moving with these equity markets. So I just wanted to bring you that update on gold and silver. A lot of volume flowing into it, but as long as that US dollar remains strong, I still have that somewhat bearish outlook on commodities, at least at this particular moment in time. So I'll leave you at that on this Tuesday afternoon market recap. A lot to speak about, obviously today, in consideration to that of Monday's trading session. A big big candle today on the equity market. So have a great evening as at this Tuesday. If you have any questions, email me. I've had a couple of problems with my actual email server, which I've just rectified. I've had a couple of days actually not receiving mail, or not as much mail as I thought I would. It's just absolutely flown into my inbox now. So I have a lot of catching up to do, and I will respond to you over the next hour or two to close this Tuesday market recap. All the best, traders and friends right around the world. It is James signing off on behalf of Pivot Point Trading. All the best. Goodbye.